Welcome everyone to the first session of on day 2 of the Modern Investor Summit. I'm Luke, Global Macro Analyst at Finimize, and I'm joined today by two very special guests to open the second day of our summit and delve into the world of crypto. Craig Salm, Chief Legal Officer at Grayscale, and Susi, Co-founder and CBO at 3 Commas. During our second day of the summit, we'll be running 4 virtual sessions featuring ARK Invest, Cathy Wood, Pomp, and more. We'll be finishing off our summit with an in-person event live in London with BlackRock, IG, Interactive Investors, and many more. Comment in the chat if you're coming along. I'm looking forward to seeing you there. But first, why are we all here today? In recent years, we've seen a huge surge in retail investors, and now our generation is facing one of the most complex investment environments in history. 2023 will be full of landmines, and the year that defines the culture and rules for the next era of investors. That's why we've gathered you all here today. This is your chance to hear from informed expert voices to empower you all with quality information. Now to our first session in housekeeping. If you haven't already, please introduce yourself in the chat box with your name and where you're tuning in from, and answer the poll you should see on your screen now. This will be a 30-minute discussion followed by 15 minutes of audience Q&A in terms of how it's going to run. Don't forget to ask your questions in the Q&A box below and upvote your favorite questions. Okay, so we've got some meaty questions to chew on. Let's dive straight in with Craig and Andreas. How are you both this morning, gents?
Doing well. How are you, Luke?
Good. Yeah, good. All good. Thanks a lot.
Good, fantastic. Okay, well, gents, we're going to dive straight in. Craig, I'm going to direct this one at you to start with. So we saw 57% of the Finimize community told us they would invest more if there was better regulation for crypto. What, in your opinion, is better regulation, and how will that have a positive impact on crypto adoption? Isn't there an argument for crypto to remain unregulated to keep up with the pace of innovation before striving for mass adoption?
So that's a great question. When I think about crypto regulation, what I do is divide the industry into 2 high-level categories. You have the centralized intermediaries, and then you have the decentralized protocols. With the centralized intermediaries, that's the exchanges, the brokers, the dealers, the custodians, whereas the decentralized protocols are Bitcoin uses a store of value, Ethereum for smart contracts, for more complex types of transactions, decentralized finance for more advanced types of financial services, and so on. And when you have those 2 categories, I think the regulation really should be focusing more on these centralized intermediaries, because those are the actors that are providing services very familiar to traditional financial services. That's where you have things like custodial risk and counterparty risk, credit risk. And so there's a whole slew of regulations that have been evolved over the years to account for those types of risk while allowing those services to exist. On the other side of the spectrum, when you have these decentralized protocols, well, you shouldn't regulate the protocols any more than you should regulate email or some other internet type of technology. Instead, you want to focus on the use cases of that technology and make sure that it's not being used by any sorts of bad actors. So I think that's the right way to sort of think about varying types of regulations. Within the decentralized category, we have this long-standing question over what assets are securities or commodities or currencies or something else. I think that's a question that is rightly being worked on as well, but that's sort of the framework I think is what we should be following for thinking about any form of regulation. With more clarity there, I think you'll start to see more actors come into the space because they'll have guidance and clarity over how these things operate, how they should be accounted for and regulated, and so on. So, more clarity there is definitely something that would bring a lot more innovation and more actors into the space.
Thanks for that, Craig. That was very insightful. Staying on the theme of regulation, Andreas, I'm going to direct this question to you. What is holding the industry back from being regulated right now, do you think? And maybe better regulation could have prevented what we saw with FTX.
Yeah, that's again a very good follow-up question on what Craig just said. But the thing is, I mean, one thing that is definitely holding us back is that there are so many different kind of ideas flowing around from the regulators across the world. I mean, we see Europe with its MiCA initiative that will be rolled out quite soon, and I think that actually it's a very good sign for Europe, because Europe has been kind of leading the way that we can, adopt one regulation and it would be working across the whole kind of region, which makes it much more easier for the companies to kind of adopt to that and kind of roll out their services across the whole region, not just particularly one country. And now then you see, kind of licensing or regulation that is coming from Switzerland. Then you have like Singapore, Hong Kong. You have something totally different in US. You have the VARA in for the UAE. So there's a lot of these kind of initiatives, but the problem is that there's no good synchronization between them, which means that what you need to do is, as a kind of centralized company, or even not just a centralized company, because the MiCA will actually be it will be regulating also any type of business that is has to do something with crypto. I mean, if you fall under this kind of virtual asset service provider definition, which is super broad at the moment, you would be kind of you need to adapt to that already. And I think that one of the ways how this could be much better kind of rolled out globally would be that if one or the other license, which is like stronger in terms of the requirements, could be more or less universally be accepted by the other country, like with very minimal adoptions made for this particular region. So this could help a lot. And the other countries which are, I would call them in kind of gray zone, which don't have their own regulation, they could at least say it out somehow loudly that if you are if you have already the license from one or the other region, and we consider that to be quite a strong one, we would allow you, until we have our own regulation, but would allow you to work in this country. So partly this is true already, but I think that this kind of clear playing rules by the regulators would help a lot, because right now there's a lot of kind of gray area which no one understands. And then you add on top of that all the kind of advertisers or advertising networks like Google and Facebook, who also don't know what to do in that situation, because they will send you to one regulator, then you get the license, they say, okay, fine, now you can do advertising only particular country, right? And some other regions would accept that, and in some regions they won't. So there's a lot of gray area right now. I think that more kind of international cooperation on taking best examples or best cases and kind of adapting to them by the other countries would actually be really helpful here.
Yeah, I think Andres raises a lot of really good points, which is that you have a technology which by definition is borderless, trying to operate within physical borders. And when you think about within those borders having various types of regulations and rules, how do you find some consistency so that the innovation can flourish and we can have mass adoption? Even within the US, we have various financial regulators that may or may not have jurisdiction over different types of protocols and use cases. And that's just within one country. Then you have to think about other parts of the world that fortunately have, for the most part, one financial regulator that can be more coordinated. But that's definitely a big challenge that the industry has and will continue to face. One issue that Grayscale is very much at the forefront of is trying to obtain the first spot Bitcoin ETF, which exists now in Canada and various parts of Europe and Australia. So it just goes to show that the challenge in something as simple as having as an investment vehicle that just holds Bitcoin. We have the first publicly traded Bitcoin fund in the world, and we're trying to make it more accessible through more regulation. But it's something that will take time as regulators become more comfortable with the asset class and its various use cases.
Okay, great. So we need a more synchronized sort of global blueprint framework from which to work with for regulation that can be applied consistently. Craig, you mentioned an interesting thing that you're applying for the spot ETF, and it's already in Canada and Europe. Grayscale's trading at quite a large discount to its NAV at the moment, the ETF. So is that something which you think will bring that discount to NAV, net asset value, back to a normal region?
That's right. So GBTC launched in the US back in 2013 as just a private fund, always with the aspirations of eventually converting into an exchange traded fund when allowed by the regulatory environment. Since then, it's become a public investment vehicle. It's become SEC reporting. It's now the largest and most highly traded Bitcoin fund in the entire world. What converting it into an ETF would do is several things. One is allowing it to better track the value of its underlying Bitcoin, uplisting it to a national securities exchange, bringing more surveillance and protections. So always moving more forward towards regulation is really what our mission has been. And it's true, one of the main benefits would also be allowing that discount to NAV currently to close closer to NAV.
Great, thanks for that, Craig. I think this is probably for both of you. You can dive in. The next question is more market related. So we know volatility is a hurdle for mass institutional adoption in terms of allocating risk capital. Pre-FTX, Bitcoin volatility was actually lower than the S&P 500 for a decent amount of time. What do you think was the cause of this? And do you think it's sustainable for longer periods of time going forward?
Craig, you wanna jump on this? So you guys are more on the institutional side.
What I have to say is, I'm the legal person within Grayscale, so not necessarily the best person to speak to about markets and volatility and things like that. Yeah. What I would say though is that our investors are very much long-term investors within crypto, and so they're not looking out week to week or month to month. This is very much a years-long investment for them, given how early it is within the asset class. Bitcoin itself was only invented a little over a decade ago, and now you have more complex types of use cases like Ethereum and smart contract protocols and decentralized finance. We're also seeing the sectorization within crypto form. So rather than investors just viewing crypto as 1% of their overall portfolio, they're now looking within the crypto asset class within various sectors, something like gaming and metaverse and computing, all these different types of use cases that are evolving, and investors know will take a long time to play out. So if you're talking about volatility over some short time frame, that's not really something that's necessarily concerning them because they do have that long-term outlook.
Yeah, just to add on top of that a little bit. So I wouldn't say I would agree here. So it really much depends on the strategy that you are applying, because we see quite a lot of our customers who are on the kind of B2B or hedge fund side. So these guys love volatility. So it depends on your strategy. Volatility doesn't necessarily mean it's bad. It means that you need to adopt or have a special strategy for that kind of market, right? And for example, if we even look at some of our products that we have available from the very newbie to more advanced users, for example, a grid bot. So the grid bot loves volatility. So the more volatile it is, the more it will be trading, and the more it will have its effect, right? Or take delta neutral strategies, which also are quite good if you have a lot of volatility here. So I wouldn't say it's necessarily bad. It's just depends on what kind of strategy. If you're like super long strategy, then you don't care about that. If you are kind of midterm long, then you might be caring about that. And obviously, the volatility problem obviously it's a problem for projects that the utility value will depend on that, so that you cannot actually forecast your economic outcome, not for you as a DAO, but also for your community who are depending on you or who are building for you. So this might be a problem, but in that particular thing, I mean, I don't think that all the coins out there should be actually considered as tradable coins and should be actually being as investment instruments. So that's a little bit separate topic which needs a little bit more time.
Okay, great. Fantastic. So beyond regulation, what do you think will unlock mass adoption and sort of make it mainstream? Do you think it's more the education, explaining a complex topic like crypto to a broad audience? Do you think it's institutional adoption, maybe the trust aspect, removal of bad actors, etc.? And this is obviously a question both of you, I think, would be well positioned to answer.
Yeah, I mean, I think there's a couple important pillars there. I think one is access. So on the Grayscale side, we formed because we knew that investors would want to access this asset class, but for regulatory reasons or familiarity reasons or just their level of comfort, wouldn't be able to, open up a command line terminal and go mine Bitcoin, or wouldn't be able to go to a centralized crypto exchange in a jurisdiction that they might not be familiar with. But what they could do is open up their brokerage account and invest in Bitcoin or Ethereum or other assets in investment vehicles the same way they do other stocks, bonds, or commodities. So our mission is to bring access to that type of investor who wants to access crypto in that manner. But there's others that are very comfortable being more crypto native. So I think opening up access to those different preferences is really important. I think trust is also a very important pillar, given what has happened in recent months around actors not actually having the assets that they say they did or using them in illegal means. So I think, knowing who you can trust and knowing that they are regulated and audited and things like that is really important. And then education is certainly one of the really important pillars. This is a very new asset class, and if you're not technologically very savvy, it can be difficult to understand how it works. I see somebody just wrote into the chat, they've spent hours trying to learn about crypto and still feel very lost. And I think that's a sentiment that is certainly felt by a lot of people. It's an asset class that's only been really accessed by single-digit percentages around the world. So education is really important. Within Grayscale, we put out educational content about how the assets and the protocols work. We're often going down to DC and speaking with policymakers or regulators to educate them more about the asset class. So I think all those things are really important to allow for more mass adoption as the innovation continues to flourish.
Yeah, I could add a little bit on that. So I don't think that the mass adoption will start from crypto as a means of investment or even the asset class for investment. It's much more like if you roll back to, let's say, 98 and think of internet at that time. I mean, if we would measure the adoption based on how many people traded the stock just purely as an investment vehicle or investment means, then probably we would see also quite low numbers there. The thing is that what actually drives the adoption is the real utility behind these projects, and I think that this is one of the things that has been overlooked for the last kind of 5 to 10 years at least. Is that first with the ICOs, right? So it was like initially meant like the projects were not there, the utility of these projects were not there. There was no use of these projects, but people were already selling these virtual stocks, tokens, whatever there is. And a lot of the kind of mass audience kind of got a wrong understanding of what crypto is. That crypto is like this rags to riches quickly kind of asset class, which is not, and it was never meant to be. It was more about the technology. And now I think that this is one of the things that we as an industry, as a community, need to think much more about. Is like, where would we actually have the real use cases of crypto projects, and where does blockchain help us to do things better than we used to do it before? And so and once this adoption becomes mainstream, then we can talk about whether the underlying assets can be actually traded, or is there any trade value there, or store of value, or something like that. Right now it's like inverse, and it's wrong, and that is the problem that has been driving a lot of this kind of volatility. What normal asset class would drop, like, except for tech companies, which have dropped also 60-70% lately, right? But in essence, like, how do you go from 70,000 to 17,000 in such a short notice? And we should be thinking much more about that. I can give you a good example. I'm from Estonia, and our company is based in Estonia, and a lot of people here, if you go out on the street and say that, "Hi, guys, do you know that you have been actually using blockchain or been on top of blockchain for 10, 15 years already?" They will say no. But the reality is that all the e-government of Estonia and all the e-services, from healthcare to everything, is connected. It's all built on blockchain already. And but we haven't been talking about that very loudly. But the reality is that it's all on blockchain. It's all timestamped. It's all it's all already there as a technology. We should be thinking of these kind of use cases on how we actually get people to use blockchain without understanding that they're using blockchain. That would be a real adoption. And then bring out this value and saying that, by the way, you have been using that, and this has value, and that's why the company behind it also has value. So I think that the biggest part of this adoption is actually payments, which is something people are doing on a daily basis. In many cases, they should be not knowing even that this is happening on blockchain. So imagine, going to a neobank or even in your traditional bank, and making a euro-based or USD-based payment. What happens under the hood is important. For the person, it's going from one account to another. From a parent to a child, or from a wife to a husband, or whatever, to a local merchant. But whether this happens actually through the SWIFT or it happens through USDT equivalent, that's actually a big adoption part there. And once we get to the point where everyday people will start using it, even without knowing, then it's really a good sign of adoption of different projects. And then we can get to the next parts and build on top of that, make an asset class out of that, and start talking about the investment part.
Yeah, and I think those real world use cases are often difficult for somebody in a country where, for the most part, their banking infrastructure seems to work. I think a lot of Americans, which I can speak for, feel that way. But you have other parts of the world where banking is not as accessible. And instead of going through the traditional banking infrastructure and working with things like Venmo or Zelle, which really are not truly digital, but are based on the traditional banking infrastructure, they can skip that phase and go to stable coins or other more accessible blockchain type use cases, which are more efficient and less costly and operate 24/7. So I think as you start to think about those use cases in other parts of the world, you can start to appreciate that there is real utility here. I think the younger generation also finds real value in some of the more metaverse or gaming types of use cases, because they grew up in a digital world and it's very normal to them to have occupations or hobbies that are purely digital, and therefore it makes sense to use digital currencies there. So those different use cases are very real, but things that will take time to be fully realized.
Jens, I just wanted to give you a time update. We've got 5 minutes left of the normal questions before we go into Q&A, and we've got one question left. Andreas, I really enjoyed your analogy there about Estonia and how people are really using the blockchain without actually even being aware of it. That's really interesting. But to finish off with our last question before we get into the Q&A. So which projects do you think would benefit most from crypto going mainstream, and how can consumers invest in these either directly or indirectly? So, maybe backing miners or chip makers like NVIDIA. I'd be interested to hear both of your views on this.
Yeah, well, I think that I mentioned one. I think that the first mass adoption can come from payments, because if you think of payments, of how often we do that and in what form we do that, right? It might be cash, it might be some sort of digital transfer from one account to another. But just imagine how long it takes for even any particular business, for example, in Europe, to transfer money to, for example, Saudi Arabia or Japan or whatever it is. It takes time. It's quite complicated. You need to pass all these kind of procedures, which are banks are really, really regulated right at the moment. There's a lot of kind of obstacles on the way, and it's expensive. So think of these kind of use cases. How could we transfer some of these use cases into crypto already? So we as a company, for example, it's purely legal, by the way, in Europe to pay in crypto. No problem there at all. So we do actually pay quite a lot of contractors or freelancers, even our own employees. We do actually pay salaries, and we do pay taxes. Taxes we pay, of course, in fiat. But imagine having a local tax office accepting in for example in digital currency, like for example in USDT or euro equivalent of that. So I think that the payments is number one thing where it starts really playing out, because it's just done so often and on such a wide scale. Second thing I personally would really love to see is kind of zero knowledge and everything connected with your ID, and in general, kind of passing the information without passing the information, right? So passing the token about the information. So I would really love to see that, because there's a lot of identity theft going on. There's a lot of different kind of keys getting hacked. There's a lot of hijacking going on. So think of that. If we could, the industry could go, not only the crypto industry, but in general, financial industry, medical industry, would go into the way where we can, pass on information without actually passing it on. So where people would control their own identity much more. And that's something that, cryptography in general and then the blockchains could really, really improve.
Yeah, I think ZK snarks and other privacy preservation technology is really important because crypto is very transparent without that, and user privacy and security will become even more important as you have more mainstream adoption. To that question, I think any crypto protocol benefits from more adoption because at the end of the day, these are network effects that benefit from having more people using them. In terms of how consumers can invest, Grayscale really has 3 categories of products. We have our digital asset funds for those that want to invest in Bitcoin or Ethereum or some thematic sector within crypto like decentralized finance. We launched an equity ETF recently that gives exposure to the companies operating crypto. So these public exchanges and mining firms and banks and so on for those that really want to invest in the businesses. And then more recently, we launched a fund called Grayscale Digital Investment Opportunities, which allows for investments in the Bitcoin miners to get exposure to that infrastructure layer. So multiple ways to express your views on crypto and where you think there's going to be more adoption in the long term.
Fantastic. Thanks both of you for that. Now we're going to go into, there's some tangible, practical investment ideas there for our watchers. We're going to go into the Q&A now, and I'm going to start things off with the most upvoted question. And I'm not surprised by this one, but it is related to FTX. And it says, there have been claims that the reason why so many people directly lost their money in the FTX crash is that the investors do not have access to the keys to the wallets of their assets. In brackets, not your keys, not your coins. Do you believe that exchanges should give investors access to the wallets containing their assets or remain in their current state?
I mean, for that, I would say it really depends on the user preference. So that spectrum I mentioned, where on the one end, you have somebody who is completely comfortable interacting directly with the protocol, holding their own private keys and being their own bank. There's a whole group of people for which that is, a very real and desirable way to interact with crypto. But then on the other end, you have people who are worried about losing their keys or having it stolen or not accessible. And once you can get over the hump of trusting somebody else to hold it, there should be an availability for that type of person. So it really depends on user preferences. I think as crypto becomes more accessible, you'll see more people being able to hold their own private keys and be more comfortable doing that. And that's really the promise of crypto. It allows for the disintermediation of those centralized actors, which do have the same risks that exist for traditional finance. There's custodial risk and counterparty risk. And if they're committing fraud, then that means you won't be able to access your coins in the end. So I don't think there's a yes or no to that question. It really just depends on user and investor preference.
Yeah, I tend to agree here. I don't believe that the future is one or the other way only. So it's not going to be DeFi only or CeFi only. Although we will see quite a lot of these kind of improvements in the process, as Craig mentioned. I mean, you have the custody risk, you have the counterparty risk. There are already products out there that are trying to kind of mitigate those things. For example, if you take some of the big custodian services like Fireblocks or Copper, for example. So these guys have already the product called Clearloop, right, which are taking off this counterparty risk at least. But at the same time, if we're talking about going more retail in this kind of discussion, then let's not forget that around 20% of Bitcoin wallets keys are lost forever, so they will never be recovered. Which means that 20% of the Bitcoin out there is never being going to be recovered, and that is the problem of general just average Joe user, because putting your seed phrase somewhere, remembering it, putting it on a paper, putting it on a safe, or storing it on your iCloud, that's no less risk than keeping it at a very well regulated, very well established custody player. So it's not going to be kind of an easy answer, like we need to go here or here. It's going to be a combination, and it's going to be a combination of marketing, real technology behind it, real kind of the companies being audited on the security levels and all these things. And it's still much easier and much more user friendly to do your whatever trading or payment activities on the centralized part compared to the DeFi part. So I see that the future is probably going to be that the DeFi part is going to be more on, like, putting away my money into a safe, but everyday activities will still be done in CeFi, because it just the technology will evolve, the interfaces will evolve. But right now we're talking about more or less 1 year from now or 2 years from now, it's still much more easier and more user friendly to work with centralized kind of services. And frankly, the case of losing your $100, which would be the average kind of wallet size, people are not afraid to use it on centralized exchange, that part. So before that, the argument was that people don't want to give away their identity KYC. Come on, we are giving it away to Uber drivers, like in order to set up my Uber account, I'm giving all my passport details there. So average Joe is not afraid of that. So let's be honest. I mean, your bank is asking for all the KYC. So we are getting into this kind of surveillance community, surveillance future, right? So people are not actually afraid to give out their personal information. The question is like whether they trust and what kind of technology is used behind these services that you're using.
Thank you for that, Andreas and Craig. Appreciate that view. Just before we get on to our next most popular question, I can see the upvotes coming in for it, which is on the central bank digital currencies. Just on the topic of FTX, we had someone ask as well, do you think it's going to be a signal of permanent distrust? How harmful will it be to public acceptance over the longer term, the debacle that's happening with FTX? Do you think we can move past this eventually?
Yeah, I think we can.
Absolutely. Yeah, it's a lot of trust and confidence in the short term has certainly been destroyed by that event. I think a lot of that is a result of you had these individuals who were very prominent in DC and working towards passing legislation that would bring more regulatory clarity to crypto. The irony is that that's still a very good thing to be doing, despite the fact that you had those individuals very much at the forefront of those efforts. But I think now more than ever is a reason to have more regulatory clarity and more legislation that'll bring those guardrails into those centralized actors so that things like this won't happen again. So I think short term, it'll take some time to recover from it, but long term, still very much looking forward towards more regulatory clarity, which will lead to more mass adoption within crypto.
Yeah, if you look back in any of the big, high prominent, fraud cases or bankruptcies, they didn't undermine the whole industry long term, right? So we need to get over it. And the important thing is that we put these lessons learned into writing and make sure that we never come back to those.
I agree. I think smarter regulation, sort of as we were talking about earlier, that synchronized, consistent framework will obviously provide more confidence, and I think time is a healer of all things. So it's good to hear your guys' insights on that. Right, the most popular question. I think central banks see crypto maybe as a bit of a risk to them. They like the power that they hold over the money supply, and it's a competing currency. So the question is, what do you think will be the impact of central bank digital currencies on the crypto space?
I mean, I'd say my common theme is more experimentation is good, and we should have as many available, accessible ways to access crypto as we can, depending on user preferences. Within the central bank digital currency space, what you're trying to accomplish is effectively a stable coin, but that's issued by the federal government instead of the private sector. The private sector already has proven that they can establish very functional, usable, and stable coins. I'm speaking of the ones that are backed by dollars or cash equivalents sitting in a bank somewhere that is audited. So why not continue to support those efforts, which are bringing that real world adoption for the payments use case within crypto, rather than try to start something new. So maybe you have sort of a public-private sector partnership where you're allowing the higher AUM and higher trading volume stablecoins, the centralized stablecoins, to continue to be operated and supported and more useful.
Yeah, I think that's what Craig mentions. Like in my understanding of this kind of the scale of from very bad scenario to very good scenario, Craig was somewhere in the middle right now. So I think that I'm gonna, the good scenario probably is that there's, all sorts of regulated stable coins out there. Every company can do one if he proves that he can actually have the reserves and in cash or cash equivalents or something like that. The worst case scenario is that the governments might be tempted to over-regulate or even kind of cancel out all these private stablecoins. And the reason for that is like very simple. I mean, they see that this is actually the ultimate, even better than cash or banking sector, because you can see all the transactions, you can recall all the transactions. I mean, they use USDC, USDT both have options to actually freeze the accounts, or freeze the funds, right? So what better tool you might have for the government to control the flow? You see all the transactions on blockchain, everything super transparent. So if the worst case scenario would be that they would cancel out or basically make them illegal to have your own stablecoins, and the only stablecoin you can use is the one issued by the minted by the central bank or the government. So that would be the worst case scenario actually, but I wouldn't rule out that such a possibility exists.
Okay, great. Thanks for that. That was one of our most popular questions, so I'm glad we could share some insightful views there. The next most popular question comes in the form of more strategy-based question. It says, do I get a better dollar cost average when buying into a Bitcoin ETF instead of just regularly buying Bitcoin directly? How has the ETF performed compared to buying Bitcoin directly over the last year?
So within the US, we don't have a Bitcoin ETF yet. That's what Grayscale is focused on, putting the full resources of the firm behind that effort. But there are other Bitcoin ETFs around the world, in Canada and Europe I mentioned. My understanding is that they do a really good job of pretty closely tracking the net asset value of their underlying Bitcoin. It's not a 100% match, but it really depends on which way does an investor want to access Bitcoin. Do they want to hold it in their own wallet? Do they want to hold it on a centralized crypto exchange? Do they want to hold it in an ETF? It really comes down to investor preferences and just understanding what the different features and different risks are.
Yeah, I think that question was more addressed to Craig anyway, so Craig will answer.
All right. No, well, Craig, on that topic, someone's actually asked an interesting question. It says, does GBTC actually have all the BTC that it claims to have? And they've go on to say that they think that the market may be pricing that that may not be the case. It'd be interesting maybe for you to confirm that. Yeah,
sure. So all of our products have audited financial statements that indicate the exact quantity of tokens within each of the funds. Our funds are regulated. Our custodian, Coinbase Custody, similarly is audited and regulated. They recently put out a letter attesting to the quantity of coins that we have in our financial statements as well. So we do have all of the coins. I think the fact that you even have that question just goes to show a lot of the trust and confidence that had been destroyed around the FTX event. But investors access us and use us because they know that we're audited, regulated. Our service providers similarly are. So I think that's how we give them the confidence that we are holding the underlying assets that we say we do.
Fantastic. Thanks for that, Craig. I hope that cleared that up that question. The next most popular question is, what do you think is currently the safest wallet to use?
That's a really good question. I mean, the safest wallet. I mean, if again, we need to divide here. Is it DeFi or is it CeFi, right? So if it's CeFi, then we don't have all the kind of information and all the audits available for all the C5 wallets out there, right? Some of the wallets, like you can say that, for example, Binance account is also your wallet, kind of. Binance has been coming out with all these kind of proof of reserves, all the stuff. All the other exchanges have done that. And probably, we have also, some other players like Crypto.com and the other ones which started more from the wallet side, also trying to, come out with these kind of proof of reserves. But the safest would probably still, I would say that out of the products out there, the safest will be the DeFi wallets, which your key is your money. So because they go straight, these wallets are still just the interfaces to the smart contracts and the blockchains out there. So that would be the safest one, but still not financial advice, not legal advice. There's so many things going on. I mean, we know the problems with even MetaMask browser extensions. They have been, the sessions have been hijacked. There are multiple problems there. So, but still, DeFi, I would say, is like the safest option as of now.
Okay.
Yeah, I mean, I've held my coins on a Ledger device. I've held them on an exchange.
Ledger as well.
I currently hold them through the Grayscale funds, which use Coinbase custody as their custodian, which sits in cold storage. So again, can't give advice on any of those, but I think it really just depends on the user's level of comfort and familiarity and trust with the given service provider.
And it's also like to add on top of that, I mean, it depends on the customer sophistication and customer kind of level. I mean, if we're talking about $100 here, to be honest, I mean, you can use any of these because the risk is just so small. But if we're talking about, let's say, millions or tens of millions that you need to hold, then it's a question. Because, for example, we as a company, at some point, having our treasury, which we keep in crypto, we understood that it's keeping it on Trust Wallet or directly in the kind of blockchain isn't actually the safest option, because you don't have really the multi-sign options there. What happens if some of the board members get into the accident, drop down with the airplane? How does the company and the shareholders actually retrieve that money? So we chose that we understood that a proper, well-audited, well-established custody for the company, for the on the level of millions and plus, would be a much more safer option for the shareholders and for the company itself compared to this kind of your keys, your money. So it depends on the use case, but this is what I think. Yeah.
Gents, we've come to the end of our time. Unfortunately, we haven't been able to get through all the questions. It's just one of those things for the viewers watching. I wish I could get through all of them because there's some other great questions, but unfortunately that's it. But I have to say a massive thank you to my fantastic guests, Craig and Andreas, for sharing those brilliant insights, and all of you for tuning in and being here and watching. I hope you've enjoyed it and you can take something away from the session. I know I've definitely have. But don't go anywhere, as Kathy Wood's session is next live at 1 p.m. and we've still got merch and Finimize subscriptions to give away today. So make sure you're attending every session to win something throughout the day. Thanks again, guys. I really appreciate it.
Thanks a lot. All pleasure.
Bye.